Let's try to get started here, not to run too late. Welcome to everybody to the panel. What are family office and hedge funds looking for in the crypto fund? So it will be a self-moderated panel, and actually I will kick off. So I will start maybe with very, very simple and basic things in order to kick off this panel. My name is Nicolas. I'm running a VC fund in Geneva, and it's a Tech for Impact fund. And we have quite a few family office and high net worth as clients. So I'm going to share a little bit with you what is their concern, how they approach the crypto world, and how we respond to that. So actually, I guess that everybody would agree that there is both a lot of interest and also a lot of confusion regarding the crypto world. I think that everybody now is asking about crypto, blockchain, and at the same time, everybody is a little bit confused with what is crypto, what is blockchain. Actually, we were discussing a little bit among the speakers before the panel starts, and most of the people who got exposed to crypto or blockchain did not even know why. So maybe I'll start, and then I'll hand off the mic to other panelists. But I'll start with a few very basic things, which is what we explain to our customers or to people who come to us in order to seek for advice regarding crypto and blockchain. Very simple. I mean, we tell them two things. The first thing is diversification, and second thing is liquidity. So regarding diversification, when investing in crypto, we made our own study regarding correlation of crypto asset or blockchain-based asset. Also, there is little history on that regarding to other type of assets. And our own calculations show very low correlation. So actually, it increases very much the risk premium ratio of a portfolio. So that's the first aspect of the diversification. Second aspect of diversification is that we try to explain what are the different types of crypto. When you mean blockchain, what are we talking about? And basically, we have broken this down in 4 types of assets. First is blockchain itself. So you can invest in blockchain without investing in crypto. So you invest in a project that uses blockchain in order to leverage or in order to implement its business model. So that's the first thing, blockchain. Second thing is what everybody knows, crypto itself. So you invest in Bitcoin, in Ethereum. You have now ETF, quite good ETF with good correlation that can be invested into. So that's the second part. The third type of asset is ICO, of course. Also, it is very complicated to invest in an ICO, and we try to give some support, both on the financial side and on the technical side. And the technical side is far from being simple in order to understand what technically an ICO is and how to assess an ICO. So those are the first 3 assets. And the fourth one is a security token, which for the moment is still a nascent class of assets. We've been talking a lot during this forum about security token. We all know that regulation is still an issue. Very few real security token exist today, but it's coming. And security token is interesting, I think, for family offices and high net worth, because it also allows to bring liquidity. So that's the second aspect. So the first was diversification with 4 types of assets, and the second is liquidity, especially with the coming security tokens. And you can invest in a piece of real estate or in a piece of art and have a token instead of having to buy the whole buildings, buy the whole masterpiece, but you can buy part of it and you can trade it later. Also, the security token is not really live today. We believe that this will come, and this will be very interesting for family offices and high net worth. So this was the kickoff. Sorry for the long kickoff. And I'm handing out the mic to other panelists.
Hi, My name's Sandiip Bhammer, and I'm with a traditional hedge fund in the US. And it's very interesting because we've had a number of our limited partners come to us and talk to us about why we have not been investing in the crypto space. There is a move among limited partners, especially institutions, to consolidate all of their investments with a few select managers on whom they've already done due diligence. So I'd like to kind of share a little bit of my history with the space. Because of the excessive requests that were coming in from our LPs, I was actually forced to learn about the space. And in the process of trying to learn about the space, I went out to the so-called quote-unquote experts to find out how they've been kind of investing in the digital asset space. And to my horror, many of them who had invested in this space had been invested in the space purely out of luck. A friend went and told them to invest in the space. And when I asked them what was the logic on how they were approaching their investments, they could not explain what the blockchain was. They couldn't explain how they were picking ICOs. They couldn't explain a bunch of things. So I literally had to kind of teach myself. And what I'm going to share with you today are a few of the nuggets that I've actually kind of self-taught myself, which I use as a template for investing in the ICO space particularly. Before I say that, I just want everyone here to know that what we refer to as cryptocurrencies are really not currencies. I mean, the word is, they should be referred to as digital assets and not currencies. Reason being that they don't have legal tender. I mean, you go to a restaurant, I was sharing this with someone yesterday, and you go and pay them for buying a steak or something, and then you pay the restaurateur and doesn't deliver the steak. You can actually take the restaurant to court and say, listen, I paid this guy money, he hasn't delivered me what I paid for. If you pay him with Bitcoin and he doesn't pay you, try going to court and enforcing that. So it's not legal tender. It does not, most of these digital assets don't have velocity, meaning that they're not transacted with on a day-to-day basis, so they don't have significant amounts of value. And the valuation concept or the valuation tenets of digital assets still remain questionable at best. People are using Metcalfe's law to value networks. Some people are using gold as a benchmark and then trying to figure out how much of an efficient asset class digital assets are relative to gold as a store of value, and then coming up with some kind of valuation metric there. But having gone through that process, so these are the basic things that I ask myself when I look at an ICO, and I hope that you find them helpful. The whole ethos of the blockchain is decentralization. So when an ICO actually comes, an ICO issue comes to me and says, I'm issuing an ICO, the first question that I ask them is, what are you decentralizing? And if they're not decentralizing anything, it's a big red flag. And it's very interesting. All of you guys, or some of you guys who are looking at ICOs, you must walk around the space here with a lot of the booths that are set up and ask these questions. It'll give you an opportunity to think about how to invest in the space. So what are you decentralizing? Secondly, I think the second question that I ask is there a use case for the token that is being used? Is there a community built up around it? Remember that, and you can probably think of yourself asking a potential ICO issue this question. The biggest question that a lot of people ask, what is the discount at which you're actually doing the pre-sale? Reason why you're asking that question is because you get the token at a discount. The moment the token lists, you basically are out of there because you actually arbitrage the difference between the price. If everyone gets the token at a discount and then is exiting at the listing price, what's going to happen to the token post the listing? So the point is you need to have a use case. So is there a community that is going to absorb those tokens, take advantage of the fact that the token price has gone down so that they can use that token to do something with it outside of just trading with the token? The third question I ask is the founders of the ICO, do they have a lockup when they are issuing the token? So if they actually have a longer term lockup than an investor, they've got skin in the game. if they're going to exit, or if they don't have a lockup, or they have a lesser lockup than you, then guess what? You're going to actually help. You're going to hold up the token while the investor, the founders are going to be out of that token very quickly. The next question that I would ask is there institutional backing? Because some of the tenets of investing in the token still remain the same tenets that you use in investing in venture capital, kind of, or you know, the equity world. There has to be a business that's underlying the ICO. And for that, you need to really think about, you know, is this a business that's going to sustain? Is this business properly valued? How are people thinking about, you know, building out this business? And if they run out of money, are there venture capitalists or are there institutions that are backing this, wherein, you know, they're able to step in and provide capital and keep that as a going concern? So these have been, you know, some of the most important things. Remember, I was talking to Miko right now about a very interesting thing. Tokens are not equity, they're not debt. So why are venture capitalists shying away from investing in ICOs? When you buy a debt security or an equity security, you have some rights. In the debt security, you're a lender to the company. If the company basically goes bust, the assets are sold, you're paid off first. As an equity holder, once the debt holders are paid back, you still have something to pay you back. You have a residual claim on the business. Guess what? In a token, there is no claim on the business whatsoever. It's neither a debt security nor is it an equity security. So you really have to understand these things before you invest. If you do that, if you think about these things, you have a great template, you calibrate your investments, you will make money. Because there's clearly a space for the ICO in one's portfolio. How much of it all depends on your risk profile, but the fact is that if you do that correctly, I can tell you that you can make a lot of money. And we're on a journey that's going to continue for quite some time. So these are just some of the things. As we go along the panel, you know, please feel free to ask me any questions, and I'm happy to answer them specifically.
Okay, so I'm extremely excited about everything that's been said, so I won't repeat anything, but I just want to give hearty agreement, right, which is these are incredibly useful pointers. One thing I'd love to do is get a feeling for the audience. So to me, what I'd love to do is I want you to picture the next 6-month time period, and I want you to try to assess whether you're on the selling token side. So what that means is, are you doing an ICO? Are you advising an ICO? Are you working on an ICO? Are you legal team for ICO? So anyone who's on the sell side, I'm going to ask. And then I'd also like to ask how many of you are on the buy side. So who's buying tokens, whether you're a day trader or an investor. So I'm going to ask these 2 questions. And it's very possible, like myself, that you'll raise your hand once and then you'll raise your hand again, right? Very possible. But I really just want to get a feeling. So who is selling tokens at any point in the next 6 months? Okay, so it's a good number of people on the sell side. Okay, how many people are on the buy side? How many people will be buying tokens in the next 6 months? Okay, excellent. And I guess what I'd love to do is, how many people didn't raise their hand at all during those 2 questions? Okay, a few. Okay, well, you know, that was super helpful. Sorry about that. Thank you for indulging me. The only thing I wanted to really add to Sandiip's concept is, to me, I like to think of this as Silicon Valley style angel investing, right? Because a lot of these deals are early stage. So 2 things that I care about. One of them is team. Actually, I should say 5 things I care about. Team, and then maybe one other thing I care about, right? Not team, actually. They have one more thing that I care about in addition to team, but 4 times team, right? So what is that about? To me, I really look at the team. I look at this person. I think, why are you doing this? Have you done this before? Like, do you know what you're doing? You know, because you're really handing these people your hard-earned, typically fiat or ether, whatever you're handing them. But you're handing them something of value, and you're hoping that they don't drop it on the ground, which they may do. So it's team. Team is super duper important. Second thing I care about is what I call time to crypto economy, right? So the thing that's amazing, there are white papers that have roadmaps that start in 2019, right? Like, I don't touch any of those, right? I'm very interested in time to crypto economy because my thesis is based on what I look at as the middle thesis. So my upper thesis is all Doge coins go to heaven. That's my upper thesis. Upper thesis, there's no optimization. The only optimization for the upper thesis is holds anything, right? So that's a nonsense thesis. There's no optimization you can do, so it's not even worth thinking about. The low thesis is everything crashes and burns. You can't optimize for that thesis except to not hold any cryptos, right? I'm actually looking for the mid thesis, which is a thesis that I call valuable things have value, right? It sounds crazy, sounds ridiculous, but that's what I'm optimizing for. So if you optimize for valuable things have value, you're actually looking for things like traction, you're looking for things like revenue, you're looking for things like customers, users, you're looking for partnerships, enterprise distribution deals. By the way, don't be fooled. The thing that is annoying about crypto right now is that people who are buying are not discerning the difference between a pilot, an enterprise pilot, and enterprise distribution. It's an infinite difference. Distribution is huge, and a pilot means zilch, right? Like if you look at most of things happening with Ripple, those are pilots. That means nothing. You get nothing. Pilots basically waste the time of the company until the pilot is turned off or until the person doing the pilot launches their own competitive offering to you. So anyhow, and you lose a ton of runway and time and money and everything else. So the point I'm making is be careful about time to crypto economy. That's the fifth thing that I care about. Team 4 times and then time to market, time to crypto economy. That's what I care about. Okay, thanks.
It's going to be hard for me to make better introductions right now, so I'm going to be a little screwed with that. But very much aligned with my fellow panelists. Christian, I'm an LP in one of the few crypto funds of funds called Protocol Ventures out of San Francisco. Invest in 6 top funds out there: Polychain, Block Tower, Metastable, Multicoin, and so forth, and Pantera, which Miko is one of the LPs. Mainly it's 85% coin trading, cryptocurrency trading, and a small exposure into ICOs, 15-20%. And the fund gets a lot of interest from family funds, VCs that basically want a way to invest in a very plug-and-play manner within the crypto space. It's an interesting industry, if you ask me, in the sense that there are a lot of people that want to invest because of the gains that you can see, double digits in a month, right? Something that I think it's hard to see in our 401ks, right? You look at those returns, 4, 5, 6%, meager returns, and then you see the 50, 60, 70, 80% a month in the crypto, right? It's just the technology, as Miko was referring to, is just, it's very hard to comprehend, and, you have to time the crypto economy, the blockchain economy, and it's hard. And so sometimes one of the best way to do so is just gonna let people that do that for a living, right? I started investing in crypto a while back, investing some family assets. And I soon realized that although I was making money, I was not an expert, right? I studied night and day trying to understand technology, but when I was doing my MBA, my econ professor taught me a lesson, comparative advantage. Comparative advantage says that basically let people that do one thing better than you do that, right? So just gonna realize, humble up, right? Take a step back and say, I'm not the best at doing that, right? Let other people do that. And so when I got in touch with Rick Marini, the fund manager of Protocol Ventures, I decided to kind of allocate my funds there, and he leverages 6 of the brightest minds in the crypto industries, and I think I found that to be a better way. Even just don't spend 20 hours in front of a computer just gonna try and buy an SEO in crypto and time the market and things like that. Just let somebody else do it, and somebody else that has a proven track record. In terms of what I look for in ICO, if I'm investing in ICO currently, I don't. I'm just gonna let somebody else do that. Our number one, just like Miko said, team. That's the most important thing. And I start from the team, I start from the advisors. Miko and I are advisors on a bunch of companies, a bunch of startups together. And personally, one of the first things I look at is who's on the advisory team. And the reason why I do that is because they're people that I trust. People that put their name, their reputations on the line. They vouch the project, right? So if they do so, I tend to believe, right? If Miko is on a project that asks me to become an advisor or invest in it, I would just say, well, if Miko vetted it, it's probably a good project, right? And then I'll look at the team, right? I'll say, what's the experience that the team has, right? A lot of the teams out there that clearly have no experience of what they're doing whatsoever. Bunch of guys with an idea, and in a traditional VC firm and traditional investing, I mean, the team is critical, right? And the experience they have, how they gel together. That's why it's so important to talk to the teams. That's why I'm saying it's a full-time job. Like, you're thinking about investing in ICO, just going on Poloniex, Coinbase, and buying a bunch of ICOs when they come out or whatever. It's a full-time job. Like, you have to talk to the team. You have to figure out the personality, if they work. It's just a real VC work, right? So unless you have the time to do so, just let somebody else do that. So team advisors. And lastly, I look at the idea, right? I start kind of skimming through the white paper. I leverage off some technical individuals to kind of, vouch for me the technicalities and the technology behind it. But sometimes I look at the readiness, the product market fit, right? In a traditional startup, you really want to achieve that a product market fit. You want to build something that people want, that people need, right? Not just for the sake of raising $20 million in half hour, but really creating something of value for the community and the industry as a whole. And I review roughly 350 white paper a month. So I got an inbound, which is very similar to my fellow panelists. And 99% of them is like a moonshot. It's like, these people are dreaming. It's almost like people are trying to build YouTube when it's 1992, when you have a freaking 56K dial-up, okay? There's no absolutely freaking way that you can build a YouTube with that. And that's what he comes across with this white paper. They just kind of want to do all these crazy, amazing things with blockchain, like it's a panacea solution, when in reality, as Miko said a while back, blockchain is the crappiest technology, right, that you can ever actually have, right? It's what you use when you don't know what else to use.
It's a crappy database. It's a good technology.
Yes, exactly right. Thank you. So there's a lot of that, unfortunately. So I look at the idea and figure out if there's a product market fit, if it's ready or not. So people, and then technology and idea and so forth. So thank you.
Thank you. Paul, he's a little bit of the odd one out, I suppose, to some extent. I represent a family office. It's a single family office. It's a personal family office. It's my mother's side of the family. They're in Indonesia. I'm out here. I represent them in the sense of moving investments in traditional worlds, the cements, the palm oils, and property and whatnot, to world where business is done through the mobile phone, if you will, the conversion from 3.0 to 4.0. For us, this conversation began about a year ago, in earnest, when we were ourselves getting the proposals. You hear talk in the market with regard, or I read in the press, for example, of this world, this crypto world, and blockchain and all of these words. And so part of the office decided, okay, we are going to spend some time and effort to investigate, to see what this is, and how we can respond, if you will. And responding meaning understanding the rules, where are we in the scheme of things, and how do you take advantage? And we didn't get very far. So as the gentleman described, what happened was we went back to the traditional ways of investments and assessing performance. And we ended up being guided by those, but those were completely the wrong or different markers of measuring or measurements or using metrics. Part of the reason why I'm here, and I'm eternally thankful to Valentine and the group for inviting me, although I met them about 3-4 months ago here, is to, I've sort of begged and pleaded saying, good, you know, I can actually talk about something, you know, set up a panel or something or other, is to understand the language. I've been taking notes, I've been taking lots of notes. I have understood that the words that I come to, or have come to understand are completely different. What prestige means. I was at a fellow family office presentation yesterday, and the words that they've used are completely different from my understanding of what I had thought these words originally and had always meant. So I think it's going to be a good discussion. I'm looking forward to it. I thank you very much for coming. You know, I'm encouraged by the response, because I think there's a conversation that needs to be had. There is a translation, if you will. I've been banding this about for the last 2 days. If there is a business opportunity for you guys, it's a translation business of our world or the old world into the new world. Please, somebody write a book or something and tell us what it means. So I'm looking forward to the conversation. Thank you.
Thanks. Hi, good morning. I'm Andrew. Like Paul I'm a single family office based in Asia. Like Paul, we are very traditional in that sense, where for the past century at least, we have been in real estate, commodities, you know, the boring stuff, the old traditional stuff. And then the whole crypto blockchain thing exploded, and we started to see how we can get our fingers wet, or our feet wet, so to say. So it's very new to at least my family. We have always been the traditional kinds, developing F&B, if you will, supply chain stuff. So when we first got in and tried to understand, we didn't understand what everybody was talking about. What's a token? No idea still, actually. What's blockchain, for that matter? We're still learning every day, at least for me. So if I sound stupid, please excuse me. We started off the only way we knew how. As private equity, we started off as a small OTC. We had fiat, right? That's a new word I learned, I think, 6 months ago. So we had fiat, and we started to provide a service to exchange cryptocurrency for fiat. And in that very simplistic way, collected a portfolio of Bitcoins, Ethereums, and whatsoever the office does. And from there, we started to explore in a very dangerous manner, aside from the traditional sense of, you know, going to the hedge funds, going to our managers. We decided to explore ourselves, the three of us. There are 3 partners in the whole office, to explore. One of us is a doctor, medically trained doctor. Yeah, he's decided to quit his job and stop tending to patients and go full-time exploring ICOs. So I think he sees about the same amount of white papers you do. I think he's in his honeymoon now in Japan. He just got married, actually. He spent 1 month in Tokyo and Hokkaido and all that. And for the entire month, every day he's on the phone with me. So I said, what's going on? He said, no, there's this new ICO, I think it's Policy Pal or something, and there's Mad Chain, and I don't know what those words are, but he said, no, we are putting money here. I said, really? We are putting money? How much are we putting? So you're spending more money on all these ICOs than you're spending on your honeymoon on your wife, you know? So something's gonna give somewhere, right? Yeah. So at the end of the day, I was invited here, so thank you to LATOKEN to share what we look for. Honestly, there's no metrics that we look for. There are no standard benchmarks or measures that we look for when we are investing into this new, I would say this new arena. As the rest of my fellow panelists have eloquently put, there are many ways to look at it. There are very different ways that you want to look at it. You can either invest into blockchain itself, you can invest into the different ICOs, or even trade crypto for that matter if you view it as digital assets. To us, we always go back to our core as a family office. We always go back to our core on why we invest into something, be it building a new hotel or buying a new ship or whatever. We look at our values first. So whoever's pitching to, I will share it from this standpoint. Whoever's pitching to us to invest in you, we will always look for, firstly, is it in sync with our family's core values? So if you know what my core values are, how our investment values are, you more or less will have an idea of what we are looking for into an investment. Surely we want to make money, so that's definitely one of the values. I mean, we need to sustain our business and of course the family. But I think the important thing is the key core value that we look at. Yes, the team is important. I totally agree with you. We have put money in some projects that they didn't know what they were doing, and it was an oversight. Yeah, and it blew. They wanted to make. They wanted to go to the moon, like the new word I learned today. Yeah, they wanted to go to the moon, and they didn't even know how to crawl on Earth. So that's the way I could put it. But if you appeal to the values of the family, and more often than not, these values have nothing to do with profit or percentages, in terms of yield and play. You more or less would get a very good inroad to a listening ear with some seriousness taken into place. The second thing that we look for when we look at ICOs and in that sense loosely, I'm using words that I just learned like 3 months ago. So we look for the underlying business that must make sense. That's the way I put it. There are people that when I walk out there, they are lending money against crypto assets. I think that's a unique idea. But because you must remember, when you pitch to family offices, we're not funds with a mandate. We don't need to have a certain cap to go here or some certain industry that we look for. We more or less like to say we do what we want. So you need to find that very unique business case where you address a problem that the family wants to be solved. And I think then you got your partner or your investment partner in the bag, so to say. So I look forward to share with you my very limited knowledge on what I know about this new cryptocurrency and how and blockchain and how we invest in there. Thank you very much.
One of the questions that I have, and maybe I'd like to throw this question open to the panelists, maybe you all can share your experience, is the question of portfolio construction, which is that, everyone here is now faced with, do I invest in Bitcoin? Do I invest in Ripple? Do I invest in an ICO? Do I trade? Do I hold? When do I sell? When do I buy? So these are all very, very practical questions. So how do the family offices go about building a portfolio? If you've been given fiat currency today and you say, okay, I have $1 million and I now want to basically build a portfolio, where do I start? So I'd like to kind of get everyone's view on how they would go about doing this.
So one resource I would love to recommend that everybody read is a book called Angel by Jason Calacanis. He's probably the most successful angel investor in the world, and he put first money into Uber and created some unicorns. So you should all check that out. So his mindset is this. Jason Calacanis makes 50 bets in a year, right? And he tends to get a unicorn out of 50 bets, right? And the thing that's amazing is if you think about how qualified Jason Calacanis' deal flow is. So the deals that he's looking at are A+ deals. And you know what he does is he does the VC soft no all the time. The VC soft no is he says, so the VC hard no is basically no. Like, I don't want to see you ever again, right? But 90% of the time, he'll say, give me a monthly update. And he'll just wait, right? And if you start getting traction, then he'll invest then. right? So the point that I'm making here is think about his funnel. And what I'd like to say is, if you're buying ICOs, I'd like to encourage you to stop. And the reason why I'd like to encourage you to stop is that 99.9% of all of them are going to go to zero. That's my thesis, right? And so to me, if you think of it that way, right, the thing that is important to understand, I think Christian said it well, right, which is Christian said, oh, and if you're doing an ICO, you should consider the same statistics. Christian said, like, this is a full-time job, right? So to me, you know, I recommend that you think about it from the perspective of diversification. Now, I am seeing family offices incubating single ICOs, right? Why are they doing this, right? I think that there's two major reasons to do something like that, right? Knowing that there's a huge chance that that incubated ICO is going to fail, right? It's just to develop competency, right? Just to have a little project and really be close to them and work with them. But that mindset is going to be a very long-term mindset, right? Right, because you pretty much know that that money's gone, right? So anyhow, that's my mindset. So in terms of diversification, you know, if you're going to do ICOs, you should maybe do 50. And the reason why I'm kind of encouraging most people to stop is I'm in Silicon Valley. I've been in Silicon Valley startup and venture for about 25 years, and the majority of my ICO investment is handled by Pantera Capital, full-time professional VC class managers, right? And so I feel unqualified to largely invest in this space. And I'm getting exposure, additional exposure, through 14 different advisory deals that I'm working on. But I consider that to be a speculative edge of my portfolio. So, you know, so through Pantera and through my 14 advisories and through selected placements of my own, I'm trying to get to 50, right? 50 individual ICO exposures. So that's really what I'm looking for. Pretty small exposures, lots of them. Anyhow, that's my portfolio construction too.
So would you just then invest in Bitcoin and forget about ICOs? I mean, before you even get to the ICO space, in the interest of time, given that the sector is red hot, people want to invest in it, they don't have time, they don't have access. It even takes a while to basically evaluate a third-party LP, a GP. Does one start with an investment in Bitcoin or Litecoin or Ether to begin with and then gradually move your way into an ICO space?
Me personally, I have a barbell-shaped thesis, which is I have lots of ICOs down here, and then I have big coins up here, right? And the Bitcoin thesis for me is what I call Bitcoin Game of Thrones, which is that the Iron Throne is Bitcoin and all the other contenders, right? So it's anyone who can unseat Bitcoin belongs kind of in that portfolio in the upper range. That's my thesis. And so I like EOS, I like, you know, things like that. I look at the upper range, I look at weird things like, you know, what's Iota doing up there? Like that will never unseat Bitcoin, you know, so that's out. So anyhow, that's my way of looking at it. But I don't know, I've talked a little too much, so.
Very much so. I know I 100% agree with that. And it comes down, I mean, somebody like Miko that has been in this space forever, like literally forever, leverage of like other individuals like Pantera, like professional quality investors, that should tell you something, right? That I'm not more qualified than Miko for sure, and we're now more qualified than these people that do that as a full-time job. So my first advice is don't invest yourself. Just have somebody else invest for you, number one. And then take that as an opportunity to learn more about the space, to get to know the people. Hang out at meetups, events, presentation, meet people, trying to understand the language, the lingo, what it's about, right? And what it's not about, right? Those moonshots that we talked about. And it takes time. Right? It's hard to kind of see like these huge gains and you say, oh my God, I just missed out on like 150% gain like in 2 minutes, right? And that's okay. You know, there's a lot of FOMO in this industry. There's a lot of FOMO. And sometimes people jump in for the wrong reason, right? This is a long-term play, not a short-term play, right? We've seen that in the internet days, right? There's a lot of crap that happened, but people that kind of lasted, there were people that kind of were trying to kind of have a long-term view. So don't invest yourself, just leverage somebody else to start. I'm a big believer in the foundational coins like Bitcoin. Bitcoin started everything, so everything is pivotal to that. And then I will start looking also at protocol coins, right? Coins where you can actually build upon other apps, like foundational coins, right? It could be EOS, it could be OneChain, it could be those guys, Universa. So like Ethereum was a good example, right? You know, it's an ecosystem where people can actually, you know, build their apps on. So those are the ones that, to me, are the most appealing, right? The protocols, right? Internet, in the internet days, we used to have 80% focus on the apps and 20 on the protocols. In crypto, it's the opposite. It's 80% protocols and 20% apps. So if you have to kind of look at some of the applications, some of the coins to invest in, I would just say look at protocols, and just like Ethereum, EOS, Universa, OneChain, and so forth. Those will give you probably, you know, a better enclosure of the gains. So that's my take.
Yeah, a quick one. I think we're running out of time. I think I fully agree with Chris. I think you should be extremely careful and cautious. It's really the start of it. It's much more complex than it looks like. And I fully agree with this approach. Again, as I said in the first words that I shared with you, I think I would look at it according to those four sub-assets, I would say. I would look at ICO, being very careful with ICO, and probably, unlike Miko, focusing on less ICOs and trying to understand a little bit more each of the ICO I would invest in than spreading on more ICOs. But that's the way I would go about it. I would also, so that's the first one. The second one is coins. And here I agree again with Chris. I think protocol coins is a very good way to get started and to also understand, you know, also educate yourself. Third would be ETF. So I would use, you know, the nascent ETF in the space. I would also invest or look for projects and business which are blockchain based and not necessarily going through ICOs or token, but using the blockchain in order to understand better what blockchain is about. And quite a few business, I think, will develop without necessarily having a token. And at last, it's not yet here, but I would be ready to jump into security token, like, you know, what is called asset-backed token, like securitization of real estate, of art, things like that. So this is quickly how I would look at it.
So I come from a perspective of real estate, and we do a lot of debt financing as well. So when we talk about portfolio construction, we don't have a portfolio whatsoever as of now for crypto-based assets. We are used to yields coming in to trickling down every day, you know, as opposed to the traditional ICOs, as opposed to how ICOs how we make money from ICOs. We are used to rents coming in. We are used to interest payments from our debts as income to our portfolio. So if I were to construct a portfolio for crypto-based assets right now, or blockchain-based assets, we will look for this kind of characteristics. That's the only thing I would say we would look for. But we pride ourselves in being very open, so I learned quite a bit from what the four of you have shared thus far, so we'll be looking forward to that. Yeah.
Okay. Can I sort of get a last word in on this side? So a couple of concerns that I had, or I had put out on paper prior to early this morning, actually. And I'll just read them out. Transparency is a huge concern, right? Again, putting on the hat or the lenses of traditional ways of assessing investments, and where do we put or allocate, or where our managers allocate the monies, if you will. Volatility is another one, of course. One of the big elephants in the room is, how do you manage the volatility in terms of the pricing, in terms of what future value is going to be. So just as a personal anecdote, so I bought into Bitcoin in 2013 and bought quite a bit actually on the advice of a friend, and I said, you know what, this is money down the tubes. This is lost. But I'll you know, for the sake of friendship, whatever, I'll do it. And I forgot about it, honestly, for years, until sort of 6 months ago, maybe. And I thought, oh my God, where's my, where's all those coins? And you know, going back to the wallet, et cetera, and everything was there. I started, you know, it ended up being checking every day now. Is the money still there? Is the stuff still there? Because of all of these hacking stuff that was going on. So why I bring this up is because I then sold a bit of those, just to make the case with the board that, hey, there is fiat money. You can actually take money out of the ether, and here you are, this cash. But that actually made the opposite, it had the opposite effect, because the questions then came fast and furious, and those were, where did this come from? What is this based on, if you will? How do we manage the volatility? We can't put money into a world where the swings are of those sorts. So it had the opposite effect. So that needs to be, again, using traditional frameworks of investment, that's something that we need to consider. Due diligence is another one. Who is behind these? So, and I think the panel has talked about this quite a bit, right? So who are the founders and the team, et cetera, which are, again, traditional ways of, in my view, assessing investments. So is there a new way of looking at the world of crypto and ICO, et cetera? So I would argue at the moment that there isn't. We are still nascent, yes, very early on, and we are still looking at traditional, using the traditional lenses, if you will, to assess all these things. And the last one, of course, is regulatory concerns. What jurisdiction do these fall under? And are the investments or the issuance or the offerings, et cetera, are they properly regulated, whatever properly means? So Singapore, to assuage some of our concerns, has got this sandbox, as you would be familiar, concept. And to us, we're watching that very carefully in terms of who goes in and what are some of the successes, if you will, or otherwise, of organizations that are in there and what comes out. So these are some of the issues that we have, and you know, feel free to add to them. Cheers, thank you.
I know we're out of time here. 30 seconds, if you really want to invest in ICOs, 3 things. We're going to see three major areas of focus right now. Initially, it's going to be security. And the reason is people are not going to get into crypto and blockchain if it's not secure. So there's going to be a lot of focus on building security apps for dApps. Once you have security, you want to have stability. It takes care of that volatility that we talked about. Otherwise, you're not going to be able to buy the coffee tomorrow, right? It's going to cost you $5, $50, $100, right? So a lot of work is going to be done on the stable coins. Once you have security and stability, you now have the scalability issues, which is a lot of people are working about. So how can you actually make blockchain scalable for 1 million people, 50 million people, 100 million people, kind of things, right? So if you really want to do an ICO, invest in ICOs and look at what dApps to invest in, look at security, stability, stable coins, and scalability applications.
Good. I'll be super brief. So you know, my sectors that I'm really focused on are fintech, gaming, and sharing economy / social networks. And if you want to kind of look at my own portfolio construction, it's all on miko.com, miko.com. You can see every advisory deal I'm working on, and also the bigger tokens I'm invested in. So you know, you can basically get a sense, and you can also just reach out to me if you need to. So from the website. So anyhow, that's if you want to kind of just see how I think. So anyhow, thanks.
My last point would be that don't be afraid of regulation. The family offices that I've been speaking to are actually literally, they believe in the blockchain, they believe in the space. They're waiting for regulation to happen. It's a sword that's hanging over people's head. And they're saying that we believe in the space, we want the regulation to happen so that we can open the floodgates and put money in. So regulation is a good thing. it's going to bring more money in. And so when people get nervous that these things are going to get regulated, you don't get nervous. It's actually a positive thing for this stuff to get regulated. It's going to get more money in. So that's my last point on that.
Yeah, no, I fully agree with what you just said. And regarding that, just a point on Switzerland, where we are based. Regarding regulation, it's a country that is quite at the forefront of trying to bring trust, confidence, stability in this whole crypto environment. And actually, we're very lucky and happy to be based there, and happy also to share with you further after the panel, if you wish, on specifically this issue and others.
Thank you, everyone. Let's have a good morning.